Well, experts in the Nigerian capital market are predicting more tightening at Nigeria's MPC meeting in an effort to lower inflation. We cross now to Lagos to chat to Dapo Olagunju. He's head of Group Treasury at Access Bank for more insight on the likely outcome of today's MPC. Thanks so much, Dapo, for joining us this afternoon. Well, that is the consensus, that we're going to see tightening, more tightening coming to the fore at this stage of the game. Are you in line with consensus, and to what extent are you pricing that in?
Okay. I think the market has generally priced in a 25 to 50 basis point increase in the benchmark monetary policy rates. However, I think that this is going to be a very interesting MPC because the MPC members will be faced with some difficult decisions. We are at a time in Nigeria where the inflation at 10.2% is the lowest that it has been in the past 3 years. This is also coming at a time when there has been a budgetary disbursement to the various tiers of government of about 1.3 trillion, which also is the highest amount that has been disbursed in any calendar month in recent history. So, I mean, the MPC members will be wondering, should we increase interest rates at a time when inflation is at the lowest levels in recent times? However, there is significant levels of expected liquidity into the system, and I think this is the basis of the opinion of market participants that interest rates are going to, the MPR is going to be increased.
And it's more so a case of the fact that we've got those liquidity levels now running pretty rampant, and that lending to a risk scenario for inflation at this stage, where already we know the inflation figure in Nigeria and what it comes in at on a month-on-month basis, pretty volatile.
Okay, I mean, I do agree with you that the level of liquidity seems to be on the high side, and I guess that's why there are additional monetary tools that the MPC would need to consider. One key tool is the cash reserve ratio, which today is running at 4%. And we think that the cash reserve, if you increase the cash reserve, for example, it gives you an automatic way to suck up or mop up liquidity from the system without necessarily hitting up the interest rate. If you put things in perspective, all right, we have minimum wage increases in the country. The AMCON liquidity is going to come in, so there are additional inflationary pressures on the market, and increasing the interest rate at this point, people would wonder, are banks really passing on this increase in interest rate to their clients? I think if you go back and look at the interest rate scenario since the beginning of the year, you would see that increases in MPR are being transferred more to the professional markets. So you have seen interest rate on T-bills and the use on government bonds. We have seen that rise as the MPR has been increased. However, we haven't seen that same increases in savings rate. So the jury is still out if there is an effective transmission mechanism between the MPR and the savings interest rate, or the interest rate available to depositors. So more and more what we see though is that the cash reserve, once the cash reserve is increased, the impact is almost automatic with respect to the level of liquidity in the system. Well,
of course, those two key points and announcements aside, we've also got the market eyeing comments from Central Bank Governor Lamido Sanusi on the Naira, where we've seen the local unit strengthen over recent weeks. What are you making of the kind of movement we're anticipating on the Naira front, and what would you be looking out for in terms of rhetoric out of the Central Bank Governor?
Okay, I think we've seen an appreciation in the currency, and largely this was on the back of two major key events. One was the fact that the central bank has now lifted the one-year lock-in restriction on non-resident investing in Nigerian government securities. And the second one also is the cap on the amount that banks can sell to the parallel market, that's the bureau de change, on a weekly basis. Now, if you look at the fundamentals of the economy, all right, there is little to suggest a depreciation in the Naira at this time. All right, so Nigeria now is now the second largest exporter of crude after Saudi Arabia, overtaking Iran. I mean, daily production is in excess of 2.4 billion million barrels per day. So there is still room, if I could say, for an appreciation of the currency. However, because of the limit that the central bank has put on how much supply goes into the bureau de change market, there is now a disparity between the official market, which is running around 152 levels, and the bureau de change level, which is at around about 167 Naira to $1. The question that the central bank is then faced is, would you leave this wide disparity, or would you close the gap? And if you are going to close the gap, how are you going to do that? There are suggestions around how can we educate the end users who go to the bureau de change to move more and more into the formal market. Because I think that the central bank has enough capacity to meet all legitimate demand at the central bank window.